Materials platform Infra Market has secured $150 million in financing from Mars Growth Capital, a joint venture between MUFG and Liquidity Group. This includes an extension of its existing $100 million facility by 5 years, plus an additional $50 million in fresh capital. This makes it one of the largest structured debt deals in the Indian startup ecosystem this year. The IPO-bound firm operates across 15-plus product categories and 10,000-plus retail touchpoints. So with this backing, what's next for their growth and global ambitions? Let's find out. Joining me now to discuss this further is Souvik Sengupta, the co-founder of Infra Market. Souvik, thank you so much for taking time out and being here with us on Startup Street. You know, this is your second fundraise this year, right? So what does this $150 million debt facility mean for Infra Market's next phase of growth? How do you plan to deploy this fresh capital?
First of all, thank you for having me. The $150 million debt.
Sure, go ahead.
$150 million debt, essentially, look, this is our second raise, like you mentioned. We already raised an equity round of $125 million, and now we're raising a debt round of $150. The essential idea behind this debt raise was to put in money in existing product categories where we're already growing, where we are highly profitable, categories like concrete, categories like AAC blocks, where we really believe the next phase of growth is going to come in. We are one of the largest manufacturers in concrete, AAC blocks, and tiles in India. We have our own brands that we are going to put extra growth money into. And these are the key categories where we're going to put in money across the next sort of couple of quarters.
Sure. And, you know, you have spoken about global ambitions before. Does this deal sort of signal a push beyond India? What geographies or verticals are you eyeing for expansion?
Look, to be honest, I think while we are looking at global ambitions, the essential idea still remains to ship out of India. So I think making products in India for global clients, global companies, our distributors globally is what we're targeting. So while we have offices across the globe, we are still sort of aspirationally trying to take building materials manufactured in India to the globe. So we accept one manufacturing capacity globally. We're still going to be primarily an India-based operations company with revenue coming globally, but primarily manufacturing is still going to remain in India.
So while manufacturing remains in India, you're still eyeing, you know, various geographies that you want to sort of export to. So what are these geographies that you're looking at?
So we have exports across the US, Europe. We export to the Middle East. Look, India is the second largest exporter of tiles. We are one of the largest exporters of tiles out of India. India is after the entire sort of Russia-Ukraine crisis, energy crisis globally, India has become from a net importer to a net exporter of tiles. And I think those are some of building material categories that we are focusing on are extremely, where India has an extreme cost advantage and overall product advantage. Those are the categories that we're looking at. We've also set up one manufacturing facility in the Middle East from where we are going to export globally. I think that will be active by sometime next year.
All right, so that's going to be active by sometime next year, which is your manufacturing facility in the Middle East. But, you know, with the kind of scale and capital backing that you currently have, are you on track to file the DRHP this month? What's the IPO plan? Where are you on that front?
I really can't talk on many things because regulatorily I'm not allowed to. So I guess we'll update you when we reach a more conclusive situation on the listing plans. Currently, look, we are well capitalized. We are looking at we are growing into multiple sectors. I think in terms of capital, we are well capitalized for the next year and a half to put money in the growth areas. IPO is an eventual sort of roadmap. But on exact timelines, I don't think I'm in a position to comment right now.
Okay, so can't comment on the timelines, but hopefully we'll have an update on that soon. You know, you are betting big on the $255 billion building materials market, right? So what's been the demand across infra, industrial and real estate segments for FY26? Souvik, we seem to have lost you there. We're just going to try and reconnect Souvik at this point. So Souvik, can you hear me now?
Yeah, sorry, I think I lost.
Okay, great. So I could just repeat the question for you, since I think you might have missed that. You know, you're betting big on this $255 billion market, right? So what's your reading, you know, especially when it comes to what's the kind of demand that you're seeing across infra, industrial and real estate segments for FY26?
Yeah, to be honest, we see continuing growth, especially in infra and construction. I think the government continues to spend on roads, airports, bridges. I don't think you need for me to come out here and give you that. Most of the people who are listening to this know the India is building more airports today in this year than they've built in decades before. I think on that front, they continue to be spending. On real estate, we are seeing that the demand that has come in for the last 2 years, the execution is still pending. So we are going to have the execution happen over the next couple of years. So I think on all that front, except consumer-oriented product categories, we don't see any sort of stagnation of demand or anyway in the building material industry. I think consumer categories, I think there is some sort of pressure on growth. We are very nominal in that industry. Less than 10% of our revenue comes from consumer level goods. So apart from that, I think we are seeing good level of growth. Our growth rates continue to be unhampered. Whatever we continue to grow on double-digit growth rates this year.
All right, Souvik. So double-digit growth rates is what you're looking at, but we're completely out of time. Thank you so much for joining us on the show, and we wish you all the best going forward.
Sure. Thank you so much for having me.
With that.